Hello folks, my name is Greg Delane. I'm the broker and owner of G. Delane Real Estate. I started my real estate career back in 1994. How long ago was that? These were the cell phones then. Here's how thin they are today. I developed this show because I believe that experience is the difference. My guests are experts at what they do. We come together to help make your real estate experience more pleasurable and profitable. Let's get started. Enjoy the show. Hello folks, and welcome to Real Estate Q&A. I'm your host Greg Delane. I've been doing this show quite a while, and on this show we have different professionals in the real estate industry, whether you're selling or buying. I try to have professionals on the show to come and answer some questions for us, and you know, I've always said that experience is the difference. Today I am extremely pleased to have one of my friends on the show. He's been in the business as long as I've been on, and I finally got him here. And without further ado, I'd like to welcome Tom Ginis.
Great.
Yes.
Thank you.
Tom
good
Ginis
to see you.
It's good to be seen, Tom. Tom Ginis is with Residential Mortgage Loans, and he's going to speak a little bit right now about his background. I never like to say a guy's bio. I like him to speak for himself. So tell us a little bit about yourself and the time that you've been in this business.
Sure, Greg. Well, first of all, thanks for having me on. I'm very happy to assist you here today. I'm a 20-year professional in the mortgage industry. I started out in 1994, and I've only worked for two companies. As you mentioned, I'm currently with Residential Home Funding Corp. We're a mortgage banker headquartered out of White Plains, New York, right on 707 Westchester Avenue. Our company does all kinds of loans, including FHA loans, construction loans, anything of that nature, both purchases and refinances. And
okay. So you were with the other company. How long have you been with the residential now? You've been there about 10 years.
It's 12 years, as a matter of fact, from its inception. Yeah.
Yeah.
And we were originally a mortgage broker, and we transitioned to a mortgage banker. A mortgage banker, we actually underwrite the loans ourselves. We fund the loan ourselves and close it in our name. So we control the whole process.
That's, even though I have some questions for you, that's a good question. What is the difference between the two?
The difference between two? Well, a mortgage broker, which is a very important part of the mortgage industry as well, they basically start to process the loan with the loan, assemble all the required documents, and actually submit it to a lender. Yes. And then a particular lender will underwrite the loan and issue all the documents at the closing, and provide the funding at the closing. Where mortgage bankers, as we are, we actually control the whole process. We have our own warehouse lines, so we actually have the funds at the closing from our own warehouse lines to fund the check, fund the closing, that is.
Okay, and before we go any further, your assistants.
Yeah.
What's your assistant's name?
Carol Lynch. Carol Lynch is she's been with the firm a very long time, and she is an unbelievable support.
Yes.
She does a great job, and Carol is bilingual, and she assists me with our Spanish-speaking clients through the whole process. She's there as a continual support.
She's a great person in that business because she's helping me right now with a couple of deals, and she's on top of things.
Yes, yes.
And I love people that call me back. Even if they don't have new news, they call me back.
Right.
They keep me calm, you know.
Right.
She's excellent.
Well, we also, our intent is also to be proactive with our communication, not only wait to be called to ask. We, maintain a line of communication with the realtors involved, and obviously the buyer and the other parties involved, which is the attorney representing the buyer.
Mm-hmm.
We've done a lot of things as far as there, and I'm very proud that we were recognized for our efforts. I was on the Hudson Valley Professional Award in 2012 for mortgage professionals. So I take a lot of pride in getting recognized with that, and I have to thank the entire staff for being there, from the beginning of a process till the client closes.
Yeah.
You need to have a great team with you.
Absolutely, and congratulations. In this business, feel goods are few and far in between, but when they come, it to recognize you for your hard work is so feels so good. Exactly. Let me start off by asking you, and I'm on this camera right here. I want to tell, because I've been doing this a long time. I got my license in '94 when I first started out with Nick Wolf and Century 21 Wolf.
Sure.
And I know that one or two of the mistakes I made early on is that I started to use people that only had the same amount of time as I had in the industry, and they had become mortgage loan writers or something, and they had just got their stuff 6 months ago too. And when I look back on it, I wish I would have used somebody that had 10 or better years in this business when I was first starting out, because me and the guys that were only about my time, we really didn't know anything. So that's why it's important, and I'm saying this to any realtor that is out there just starting out. Have somebody with experience come to talk to you in the office, deal with somebody so you won't have to make the mistakes I made.
Sure. Those are good points. One of the things I have to give credit to the companies that I've worked with. There was always a seasoned professional with me. So even from when I was out of the gate, just a rookie, I had extreme, awesome support from management, and they were always there to assist me, during the process.
Yeah.
But right now, that's the key part in this process. Things have evolved over the last couple of years due to the Great Recession, and the process is a little more challenging. It's not that it's not going to get completed, but there's different nuances and requirements that you need to stay on top of, and it's very key that a home buyer align he or herself with a professional that understands the process, maintains the continuing ed courses and all the other seminars and things that are required to really understand and maintain that knowledge to ensure that it's a smooth process for buying their home, from the initial conversation up till including the closing date.
Absolutely. I remember when it was a boom market, and I can't tell you how many attorneys that turned into mortgage brokers.
Sure.
Or no, they opened up real estate offices because they're already licensed to do real estate, and they just told all their secretaries, go get your real estate license, because if you dress relatively well, don't say anything real stupid, you could sell 4 or 5 houses this year. That's how crazy it was. And if there's a good thing that happened from the recession, is that it cleaned out all the people that didn't know what they were doing. And the people that went through it and are still here, they really know. They really know, and it's important.
Yeah. Well, as a result of the Great Recession, the Dodd-Frank Act came into effect that is affecting the financial industry, and it requires all mortgage professionals, loan originators like myself, to be licensed in the respective states that they plan to originate in, and also to maintain minimal levels of education and knowledge.
Sure.
And the thing of that in that nature, and that's very, very critical in our industry. And you can't just be in the industry now without the proper knowledge.
Absolutely.
And understanding of the process.
Yeah. And be able to explain that to somebody.
Exactly, and that's the key part, is to communicate. Just to give you an example, when you start with a mortgage process, most of the time a client comes to a mortgage professional and needs to get qualified, because before they actually go out to look for a home, they should know what they can afford and really what's their comfort zone. Not just, sure you can qualify for this, but with a person's lifestyle, they like to go on vacation once or twice a year, go out to dinner and things like that.
Sure.
Or they have other family obligations. you may not want to go to the level that you qualify for. You need to really understand what your maximum mortgage or housing obligation, rather housing obligation, which would include the principal and interest to pay back the loan to the bank, the 1/12 of the year's annual taxes, and 1/12 of the year's annual homeowner's insurance. That total payment. What are you What are you comfortable with?
Yes.
Determine that with that, and that takes a little conversation between the buyers to say, you know what, we qualify for this, but you know what, we really don't want to go past this number. And from that, you can actually back into and say, with that said, and let's say you're looking to buy a home in White Plains, and you make an assumption of taxes and the assumption on insurance. Well, if they say that you don't want to go over, let's say, $2,500 a month in a total housing obligation payment, you back out the tax insurance and say, well, this is what's left for principal and interest, and if you put less than 20% down, something called PMI, private mortgage insurance, I'll go into a little later. Then you say, well, depending on how much you're going to put down, with this is the price point that you should go look for. And I stress that early on, because then the home buyer is not going to go through a stressful process when they're actually house hunting.
Yes.
Because you know how we look at a house, we fall in love with it, and then you start crunching the numbers and say, God, you know, that should be something that should be determined at the beginning of the process, so they have a comfort zone and say, we're going to look at this price point, and that's it. Anything equal to or less than. And it creates a much more comfortable house hunting process, and it minimizes the anxiety. It doesn't eliminate it, but it minimizes it.
It certainly does, and it might expand where they're going to buy based
That's
on
correct.
the value of homes. But, you know, I'm like that now. If somebody calls, they want to see a home. Going to look for a home, if you want to buy, is not the first thing you do. The first thing you do is come see Tom, because driving down the street looking at homes that you want to buy, that's great, but know what you're up against.
That's right.
Because this isn't the real estate friendship. I always say this is the real estate business, and you can't, because your best friend just got their license and, oh, well, let me show you a house, let's get out and look. You know, a little at a time. Take that tortoise thing, and because I know that you're going to cross all the T's and dot all the I's, and you need to hear what you need to hear, not what you want to hear. Right. And I know that about you, that you will tell somebody what they need to hear.
That's right. Well, you know, we're involved in our community. You know, we help our clients get homes, but we're also involved in things that happen around the community through our volunteer work and things like that. So everybody knows us. It's not just from our profession as far as this helping people buy homes, but the other things that we do, and then just we're involved and then help everybody as much as we can.
Well, that's important. Now, we can't even get to the questions. I got some questions for you. Okay. What is the time expectation on getting a loan processed?
Good question. Well, first of all, if I could just preview something before we get to the actual, which will help. When clients come to us, we make sure that we qualify them properly from the outset. So when it's time for them to actually apply, we've already checked their income and their assets out ahead of time and pulled a credit report. So if there's anything to deal with or any concerns, we're already addressing it. Things of the nature just from like assets, you know, the money that's going to be there to use for the down payment, cover closing costs, and things of that nature. That you want to make sure you have there already, and that you're going to have the proper amount so you don't have any surprises during the process. And also, money has to be in the bank for at least 2 months prior to the application, which is called a seasoning period. Okay, so you want to make sure that that's addressed early on, so that we deal with that during the pre-approval process.
Wait a minute, I can't go to Yonkers Raceway, pull a slot machine, win $20,000, put it in the bank, and then try to close tomorrow?
No. Well, first of all, congratulations if you won that. But technically, no. That's a very good question. No, the money's got to be there. The underwriters, the process wants to make sure that you have skin in the game. This is your money. That you know. With anything else that's allowed, like money can be gifted in the process from direct family members. But as far as the assets itself, it has to be checked. They want to make sure that the money's there, it's yours, and it's been there for at least 2 months. Because they don't want to find out that or have a situation come up where you borrowed that money for the process, and then you're going to have to pay it back. So that means you didn't qualify for that scenario.
Yes.
And because it's not only protects the bank, but it protects the homeowner. Homeowners shouldn't be allowed to get in a situation where they can't afford it.
That's right.
And they're putting themselves in a precarious position that can financially expose them in a very short time and put their family through a hardship.
Yes.
So we check that up front and things of that nature. And again, like I said with the assets, and also checking the income. You talk to a person initially and say, how much do you make annually? What kind of job do you have? Let's say you're in law enforcement, anything of that nature. And a person says, I make, let's say $60,000. Well, you need to find out, is it actually $60,000? Because there are certain deductions that they're able to take, which will affect the adjusted gross income. You'd have to ask those questions up front. So we do our due diligence with our clients up front. So when they actually apply for the mortgage, when they actually have a house, we're going to eliminate or at least minimize any bumps in the roads because we've checked this all up front.
Yes.
So we've done our homework in the pre-approval process.
I know so many people that own businesses. It's a cash business, and they have these little jobs and they do little stuff and get paid. But listen, things have to be on the top of the table.
Yeah, that's a very good point, Greg. Things have changed over the last few years because of the Dodd-Frank Act and what the banks are required. Because right now it's something called QM, Qualified Mortgage. The lender that's issuing a loan has to ensure that they verified that the prospective borrowers have the ability to repay back the loan.
Really?
Yeah. So you can't just check. So there's no such thing anymore of just saying that I have great credit, I'm putting a large deposit, large down payment down, and we're not going to check your income. Everybody's income has to be verified, and jobs that you get paid, that aren't documented and things of that nature, you can't bring that into the process, unfortunately.
So what you're telling me is that there's no money down, 100% financing, no income verification.
That is no.
And let me write a seller's concession because I want to take some money at the closing. Right, yeah. And those days are gone.
Yeah, those days are gone.
Okay, let's wave goodbye. See you later. All right, those days are gone. All right. Did you have something else you want to say?
No, just general, so again, we're trying to do everything. It takes a little longer, a lot of times when our team is speaking to clients, because obviously we encourage our clients to check with other mortgage companies so they get an understanding and be able to comparison shop. And they say, well, no one asked me these questions. I said, about your income, do you have any write-offs?
Yeah.
Has the money been in it? And they said, well, no one's asking me that. And I said, well, this is really to do it up front because everyone in the process, including the sellers, yourselves, all the attorneys involved, all the realtors involved, we want to make sure that when we start the process that we're not going to get any surprises. So we're asking all those questions up front.
Yes.
So when a client is qualified, we're not gonna we're gonna at least minimize any surprises.
I can't. Gail and I in my office, some of my agents do work with a lot of buyers, but we primarily deal with listing properties and working for the seller. And, I can't tell you how many times I've called the other agent who wants to put the offer in, and by law I have to submit the offer. But if I don't know the mortgage guy from the other, and I've been around, I've heard a lot of names, and if I can't reach him and call him and find out how long and what, and this other agent, when I'm working with now on another deal, he was a little upset that I was calling this person so much. And I said, nobody but me has to go back to the seller and tell him that the deal is not going to happen. You're not going to be there. Your mortgage guy ain't going to be there. So I just need the real answers. Right. And I don't need you to tell me some pie-in-the-sky nonsense. Tell me. Because certainly after a couple of days goes by and I can't reach you the way you were able to reach me, then red flags go off.
That's right.
Now, do you guys get back to everybody when they call you and they?
Oh, absolutely, and even more so proactively, rather than wait for somebody to call us to ask. We strive to maintain a proactive line of communication, so we're informing everyone in the process, whether it's the attorney directly or the attorney's paralegal that's assigned to the file, and the buyer's agent maintain the communication. This is where everything's at. But again, because the pre-approval was done with a significant due diligence, so we checked everything out, mortgage professionals like ourselves, things are going to go smoothly. Again, unless it is a surprise, like a title issue comes up or something that didn't come up in the research early on. But you do enough research, the requisite research up front, you're going to minimize that, and you're going to have happy clients, and obviously all the professionals involved in the process will be happy how the process itself went.
Well, I can't say that enough. I always say experience is the difference. Where's the camera? The camera's here. And let me just say that if you want to work, now we're here. If you want to work smart, get professional people that know what they're doing so that you can be freed up from that because it's taken care of and you can work on the next deal. I don't want to keep backing up and working on something that happened 3 weeks ago where it's really not my business. That's the business of the attorney, so that's why you use professionals. That's the business of the mortgage, the bank who's loaning. Let me free me up so I can go shake hands and kiss babies and do what I do.
And the thing is, the key part to all the parties involved, it's in the mortgage professional's best interest to make sure everything goes well and meets all the time frames, because professionals like myself, our business comes from referrals.
Yes.
So we want to be there. I refer to as my team. We handhold our clients from the first contact, whether it be on the phone call or initial meeting, the whole process up until and including the closing, because we require ourselves to attend the closings.
Yes.
Even if it's not in our office, off-site at the attorney's office, whatever location that is, because we want to make sure that everyone is comfortable and everything. And so, that, again, as you asked before about the communication, it's a proactive communication. Obviously, if we get a call on a question, we'll call the interested party back and answer their questions. But again, if everybody's involved and we're communicating on a regular basis, there's minimal anxiety, because the process itself for the buyer already is anxiety-ridden, even for the most qualified clients.
Sure.
I have clients that, not only myself, anybody in our profession, clients could buy some of these purchases cash. They have enough, and they're still nervous.
Sure.
It's just the nature of the process, because this is going to be the roof over their head for their family. There's time frames. School years are going to start. They want to move in before that or before the holidays. So in most times, the process is going to be anxiety-ridden just because of the nature of it. So you want to make sure that you maintain that communication line and keep everybody comfortable and understanding where everything is at, and everything is going to meet the target time frames.
That's so important. I was kidding with Tom before we started the show, and I asked him what was the 3 most beautiful words in the world. And I'm just joking, but you think it's I love you and so, but dealing with mortgage people, it's clear to close. Those are the words I want to hear from Tom. Clear to close. Now, let me ask you, residential
Home Funding Corp.
Home Funding Corp. What about if I had somebody in Connecticut that wanted to write a loan? Where else?
We're good question. We're licensed in 11 states plus the District of Columbia. So if everything from everything from Connecticut on down to Florida, inclusive of Florida, we're licensed in.
So you can, if I want to buy something in Florida,
our firm can handle it. Yeah.
You guys hear that? That's important. That's important. You want to deal with professionals, and you guys are in 11
states plus the District of Columbia. Not every loan officer is licensed in each state.
Yes.
But we're all. I myself, I'm licensed in New York and Connecticut.
Yeah, but if I wanted to do a deal in Florida,
we would find.
And you would be the guy that would find the right person.
I would, and within our firm that can handle that, yes, and that's licensed to handle that for you in Florida, we would ensure that that you would get the proper
experience and the good.
That we all
Yes. Well, that's great.
Because remember, everything is, our reputation is hinged, like all professionals, on the job that you're doing now, so you can, go forward.
Here's one other question I have here for you. And Tom, you've been great. You're answering these questions. You're right on the money. What should a buyer's expectations be?
Good question. Well, the expectations of a buyer, because we all get what I refer to as locker room advice. We go to work and we say we're going to buy a house, or we're at the dinner table with relatives, and we're all going to get advice on how things are done. But the reality, every situation, especially nowadays, is completely different. The timing or the things that you have to deal with. It's with the proper process. An application is taken, everything is submitted, we order the appraisal. Once we have a complete file into the system, our current turn time is usually about 72 hours business day, 3 business days from the time they receive a file, the underwriting team, to underwrite the loan and issue a commitment.
So okay, let me just ask, if I don't have to have the money sit in the bank for 2 months to verify it, the money's been in there, and I can show that it's been in there 2 months.
Right, because when we ask for bank statements, it's going to show that we're going to ask you for 2 months bank statements, and the first bank statement, the opening balance, is going to have that money already in there. So let's say we need $75,000 for the transaction to put the down payment, cover closing costs, and for taxes. If we need $75,000, that first statement, the opening balance, is going to have $75,000. So it's already been there.
But now you get the commitment, or you wrap things up in 72 hours, and the money's already been in there. When can I look at closing?
Good question. Days? Well, once that happens from there, the commitment will come back, and the way our loan officers, we do everything up front. We ask for all the proper documents up front because we're doing this every day. So we're going to make sure that we ask for everything that we know is going to be involved. But sometimes after the underwriter reviews it, he or she may have a additional question or require additional documentation. The commitment that comes back may have some additional conditions or things that need to be explained, and then we'll follow up with the borrower to get that, or if it's something regarding the appraisal, we'll get that in. But if everything is satisfactory from an underwriting standpoint, then we just need to wait for title to come in from the client's attorney.
Yes.
Because the client's attorney will order that, will submit it, and usually we can close within 5 or 6 business days after that. Because, and mainly also with a purchase, we're working with a contract. We're working, by such and such date we have to provide a commitment to for the client to give to his or her attorney. And then on the contract says a closing date. Yeah. We're always way ahead of that time frame, so there's a comfort zone. Unless, and being realistic, sometimes there are things that pop up that we have to deal with that elongate that process.
Tom, we got 23 seconds. Look at the clock up here. We got 23 seconds. You've been a tremendous guest on my show. Experience is the difference.
Well, I hope help the viewers just to understand. Whoever they may use, that's the key part, is just in general.
Residential home funding. Tom Ginis, thanks again.
Thank you
for coming in.
My pleasure. Thank you for having me.